Good morning and welcome to the Friday session on the second week of the online platforms market inquiry. Today we're continuing with delivery services, food delivery, and we are starting late, and I apologize that it seems that Eskom load shedding is causing havoc with some of our participants. So Paul Eats, that was due to come at 10, has been rescheduled for another time, and we'll inform the public of that. This morning, then we have coming up next WeDash, and then the Restaurant Association of South Africa, and then the afternoon session we'll have Mr. D. So I see we have Mr. Zondo in the room from WeDash, so welcome, Mr. Zondi. I think we muted you earlier, so.
I mute myself. Hi, morning, and thank you for having me.
Thanks, Mr. Zondi. I believe you have a presentation for us, so I'm going to ask you to share that with us on the virtual screen, and then please continue to take us through the presentation. And following that, our fellow panel member, Ms. Doris Tsepe, will start with some questions, and then we'll follow with questions from myself and the technical team if there are still outstanding issues.
Tell me, Mr. Hodge, is your team able to share the screen on my behalf because I've sent them the presentation? Or would you like me to share it on my side?
I think share on your side. I'm not sure if the technical team has it set up here, so please go ahead.
Okay, hold on. Let me just quickly open it up.
Mr. Zondi, I don't know if you're trying to share at the moment.
We can't. Loading.
All right, thanks.
It's just loading. It's just loading in the background. The minute it's done loading, I'll share it. Give me 1 second.
Great, thanks. I think the technical team have just also asked, it seems your mic may be rubbing against your shirt or something, but it's causing a bit of noise. So if you can just be aware of that, that would be great. Thanks.
Is that better?
Yeah, that is better.
So it's just taking that longer to load. Just give me 1 second. Almost there.
Mr. Zondi, we're getting to see, I suppose, parts of your device now, just so you're aware, in case it may be confidential.
I'm not. It's all good. Okay, great. Right, can you see my screen? Can you see my screen?
Yes, we can.
Okay, fantastic. Um, so I think I'll try really whiz past our business case. And first and foremost, before I do that, I'll just introduce myself. My name is Njabula Zondi. I'm the managing director of WeDash. We've been running for just over a year. We're actually on our 11th month now. And our reasons for really starting this business comes from possibly the slide, where we're aware that there are two big competitors within the space that equate and hold up to 80 to 90% of the market share. That market share is really scattered across the urban sector. So we found an opportunity for us to be positioned within a different channel within this market and within this food delivery industry, and decided let's embark on starting a business such as WeDash. So the industry, as everyone knows, is really growing quite well. Some of the data that's out there shows that there's going to be a steady incline of growth for the next 5 to 10 years, especially within the South African market. And we do believe that there's still room for more players and more participants to compete within this industry. What we did identify specifically for WeDash is that there's a great opportunity for food delivery in the township and in the underserviced market. And when you consider the aggregated buying power of the consumers that stay in the townships, it offers really what we see as a huge potential for business growth and return. And so, who are we? We're an app created solely to enable home delivery services to townships. Our focus is to provide the convenience to consumers that we believe and know are within those sectors, and ensure that the convenience is both spread across fast food delivery as well as goods and essentials for any form of groceries and potentially in the future some wholesale goods as well. Our aim, of course, is to always keep the level of service and standard of the industry the same. So we definitely use technology to infiltrate the market and have done so successfully for the first 12 months. We find that due to the lack of public transport that exists in the townships, deliveries then in the townships become actually even more integral, important role, because unlike the access that is common in the affluent areas, we do believe that providing a service such as this can mitigate a lot of potential elements of crime and offer convenience to what we consider the market that has not been serviced yet. So what we offer is very simple: home delivery service, and we also are delivery partners for fast food chains, restaurants, big and small, and some of the virtual and ghost kitchens that exist out there. We have really one mission, and that is to be the number one home delivery service in the townships, by providing, of course, a solution for consumers that is second to none, that still makes them feel that they are not getting a service that is less than what the big players within the industry would naturally be able to give them, and ensuring that we level the playing fields of convenience. Our second mission, of course, is to just provide delivery partner solutions for small business, small fast food chains, franchise groups at the national level, as well as I said previously, the rise in the ghost kitchen industry. We definitely have aspirations of expanding our reach. Currently, we're in the Western Cape with aspirations of expanding into the 4 main provinces in the country. Our business model is simple, as you've probably heard from other competitors and other talkers that are out there. We've got a model that really consists of consumers, merchant partners, and driver partners. And consumers get to benefits of downloading our app or being able to order online from our web application. Our merchant partners are scattered across smart food industry, groceries, liquor, and we would like to, and a bit of pharmacy, and would like to eventually in our future go into wholesale as well. The most important part of our wheel, or at least one that is what we highly find value in, is our driver partners, of which in every area that we do go into, we ensure that the drivers are local to the area. Our model for our driver partners is split into full-time drivers and independent contractors that can come in, do a bit of freelance work, get a little bit of extra money, and come in as they please in terms of their schedules and timetables. And then we do have fixed full-time guys to ensure that the delivery store is maintained and the service delivery is to a standard. The last part of our model that really doesn't cater for the three, but is more a revenue stream that we find is quite critical, is the providing the delivery partner solution for small business. And so we play that last mile partner role for anyone in the township space or anyone who has a business in the township space trying to get in. Our ordering process is similar to the industry trend. So a customer will make an order on the WeDash app. Order is rejected or accepted by a restaurant. We've got a device that we either have at the restaurant or our merchant partners can have access to our dashboard via cell phone or any laptop. Most importantly, after that, it's accepted automatically. Messages get sent to our driver app. Our drivers local to the area make their way to the restaurant and ensure that they arrive within the 20-minute time frame. Collect the food. Notifications, of course, updates happen consistently throughout that experience for the customer. And the last point being drivers arrive and collect and drop off the food at the customer. And that is the end of one complete cycle of delivery for us. We integrate in very similar options. Forgive me if I keep saying similar, but it's important that as much as we offer what we consider as a solution and underserviced areas and township spaces, that the experience, the tech use is still on par with big players, and it's also at a standard that provides the service and also the high quality experience that we want for our customers. We integrate similar in terms of how we ensure that this communication is clear and transparent to the restaurant. Our merchant partners can either use their laptops or their phones to access the dashboard. Secondly, maybe the bigger restaurants would put a handheld device that ensures that whether or not the managers or the heads of staff are not present, notifications can still pop up and the staff can still ensure that the delivery happens in time. And then, of course, the most convenient in terms of ensuring that there's no, the one that keeps the most form of efficiency, of course, is our third option, which is integrating directly onto a merchant's point of sale. And that allows for the order to go directly onto their POS. From there, they accept it, and it's a lot faster in terms of feedback going straight to the kitchen and having that food get prepared. WeDash, in terms of how we make payments, is once a week to all of our merchant partners. We've got a selected day or days in the week that we choose to pay our merchants. And all payments, of course, are made less our markups and our commission structures that we set up. Just a little bit in terms of our consumers, a little bit of insight as to who they are. We have, as I said previously, that we currently still in the Western Cape, with 70% of our customers coming out of Mitchell's Plain, 30% are split between Landa, Gugulethu, Khayelitsha, and Aslo. The very interesting part of our insight is 85% of the customers on our app are women. 15%, of course, make the rest of it being men. And we see that as very insightful data that allows for us to strategically make decisions such as going into the grocery space and ensuring that we provide what clearly is an important value add for the township space. We've got a very nice split in terms of young and old people using our app, and both of the age, in terms of the age split, we believe is still people that are within the LSM of 47. So the majority of them are still forming part of the middle class. In most cases, they are working in CBD, leaving the townships to go work and coming back home. And rightfully, on their way back, whether they're taking a car or a taxi, they can make an order and have the order meet them at their house. And that's the form of convenience that we believe is invaluable for some of the customers that we have. So I guess the most important thing for us is, why WeDash, why the townships, where's our value? And I think we look at, of course, going into an untapped market, and we believe that the aggregated buying power of this market is very strong and has the potential for us to really capture a bit of the market share that exists. We do believe that there's little competition from the big players, but that's not something I have any doubt will probably will end anytime soon. We have no doubt that the bigger players that you guys will probably have heard in their presentations or probably know of, or probably be going into some of the areas that we're going into. So I guess it's also quite critical for us to look at expanding faster, creating our traction in those areas and forming some form of foundation before they come in. And most importantly, we provide what we see as a huge value add for small business, being able to pick up and drop off their food, add online revenue streams and platforms for them, and be able to, generate more revenue, because to only benefits of the in-store customer is something that's quite limiting for some of the small businesses in the township. And given the element of safety as well that exists, it's great that they can still open up a little bit later and channel all of their online, all of their revenue via our online platform when the elements of in-store start becoming a bit of an issue. I think that's more or less it. I do have a little bit in terms of who our competitors are, the main ones at least, and our current positioning, and a little bit of some of the feedback that we receive from some of our customers. And thank you very much for having me and presenting.
Thank you, Mr. Zondi. You can stop sharing your screen now. We'll proceed to questions. As I indicated, Ms. Tsepe will lead those questions, and then there may be more from myself or the technical team.
Sure.
Just the idea of looking at townships as underserviced areas and then going in there and trying to develop that market. So if you could just tell us a little bit more about what did you do in order to develop that market? What strategies did you put in place to do so, both at a customer level and at a restaurant level? If you could just share with us your insights there. Mr. Zondi?
Okay. Sorry, the line seems to have cut. Hello?
Yes, maybe. Can you hear us?
I can hear you now. Can you hear me still?
Yes, I can hear you. It's much better, actually.
Okay, great.
Would you like me to repeat, or did you...
Please repeat your question for me, Asabli.
Okay, thank you. I just wanted you to just share with us the strategies you employed in order to develop this untapped market, as you put it, which had not been serviced by the bigger platforms. What strategies did you use, both developing, attracting the customer side and attracting the restaurants? If you could just share with us some of your insights there. Thanks, Mr. Zondi.
Okay, sure. I think most importantly, on the customer side of things, we'll have we'll have above the line and below the line forms of marketing. So digitally running certain campaigns on Facebook, targeting them into those specific areas that we would like to see growth in as a starting point is always good to get our name off the blocks. But what we found most importantly in those areas is to break some of the barriers such as perceptions of paying with card and ensuring that there's a bit of transparency and there is an identity behind the business. We found that it's important to do activations, being at the malls, ensuring that we do run some form of specials and we've got promoters on the ground that our customers can, tangibly see, or that will build a lot more trust. And then once we have those digital conversations, it gives us a lot more, loyalty and trust towards acquiring that customer. I think in terms of, customer acquisition and that strategy, it's about as far as I can possibly tell you because I think it's one of our value adds. And, we think long and hard in terms of how do we capture the customer. And as I say, the most important thing in the townships is being visible, being seen, and once that element has happened, being able to translate that physical presence into an online conversation that we can consistently keep up via social media, via Instagram, and building that attention in that form of way. I think for our merchants, as a strategy that we implemented is it's a bit of a no-brainer for the merchants. Merchants have always benefited of just in-store revenue. So to be able to now have their business online, to be able to leverage off a platform such as WeDash and generate some form of online revenue secondary to what they are getting, of course, in store is a huge value add. So we didn't really need to think long and hard on how we partner up with the merchants, but most importantly, just show them the value that it brings to their business. And we believe that there's no way WeDash can grow in that township space without benefiting and growing with our merchant partners. Without their growth, there'll definitely be no need for WeDash. And thirdly, I think in terms of our drivers, we think that we have a huge responsibility to create some jobs. And if we can identify, and which is really what we focus on all the time, within every area that we go to, we look to find the locals that stay in that area. One, that strategy helps us mitigate certain elements of crime for the guys who are aware as to the certain street corners that could be of hindrance to the delivery experience. And also at the same time, we find that, of course, given this pandemic, there's a lot of people looking at any form of extra revenue. So we welcome the independent contractors, the guys that can work whenever they feel as if and generate some revenue while still within their neighborhood. And then, of course, our responsibility is to not just keep it as an IC model, but ensure that we do have full-time guys, because it's important that the drivers are respected and recognized for the effort that they put in towards the success of the business, and both the business of the merchants as well as WeDash. So in terms of our strategies, I hope I've answered your questions across our model. And thank you.
You did. Thank you, Mr. Zondi. Just on you touched on trust and loyalty, and I would imagine where use of credit cards you spoke about, online payment as a method of payment. People are quite cautious about that kind of payment system, and I would imagine you had to create some trust for them to be able to use that. And what was that? Were there challenges in that regard, or did you have some strategy in order to get them to trust you as a brand, being new?
I think most importantly, the elements of card payments is just the perception that I'm going to make a card payment to someone that I don't know or a business that I cannot see. And because of that reason, my level of trust with it is very, very low. So as I said, one of the main strategies that we did use was, of course, being on the ground, ensuring that we do have activations and having our promoters provide education to the customer in terms of, the importance and the reasons why we only do online payments. We don't want to tempt anyone within the process of delivery, nor tempt the ones that are looking outside and looking in. In a typical situation, our most ideal scenario is our driver gets to our customer, drops off food, and there's no exchange of cash. If there is, and as we try to increase our rate of orders, then of course we open up some room for temptation, both from the customer's perspective as well as the one who's seeing the driver consistently go to that customer. So they may now start seeing that there is a possibility for me to make something out of that. So it is really about education, and it is about innovation and building that trust. And secondly, we have also integrated with a platform that has allowed for us to work with, I guess I should be in a position to say this, we've worked with Flash, and Flash is a very important tool in terms of the informal market, in terms of as a currency. And so if any one of our customers is afraid or anti the idea of using their card, they can just go to their nearest store where they buy their bread and put 200 Rand and ask for a Flash voucher, take that very same Flash code, add it onto WeDash, and then they can automatically get funds loaded into their wallet. So that's another method that we did use as a way of just trying to, whilst we educate and whilst we hope for innovation to lead the way and breaking the barriers of making card payments, at least there is another alternative for our customers.
Thank you, Mr. Zondi. I thought James wanted to say something. I just wanted to just explore also a bit on the marketing side. So essentially, we all know that marketing online is expensive. So you've had to find some innovative and relatively a non-expensive way of doing so. Is that so, or did you still find a challenge in marketing so you could become visible to the consumer?
Marketing is always going to be a huge expense, and I can tell you that in the first 11 months of our growth, we'd equate 80% of our acquisition of customers to word of mouth. 20% would come through some of the digital campaigns that we've run at little to no budget. The most important thing within our space is to ensure that our customers build trust with us enough to download the app. And then once that's been done, our service delivery would allow for us to retain the customer. So I can definitely agree to the fact that marketing as an expense is massive. But our platforms for marketing at this current stage is probably the traditional ones, being Facebook and any form of social media. And hopefully in the future, as we, hopefully find ourselves in positions where we have investors and budgets that allow for us to really expand, we'll probably look at leveraging off the local leaders, the local influencers, or the local men and women that are within those communities. Another strategy that we've used that I think has really, really benefited us is working alongside the restaurants. So being able to leverage off a small business that's got 20, 30,000 followers on their page, being able to, do a story together, tell them about WeDash while they also offering an extra value add in terms of delivery for their customers. And being able to leverage off those partnerships that we've created has allowed for us to not really spend as much in terms of our marketing, although given the fact that there's no doubt the big players will start coming into these channels very soon, it's imperative that we do eventually find ourselves with bigger budgets and more bucks to spend when it comes to the marketing side of things. Will we ever compete with those guys at their level? I don't think it makes sense, nor will we have the financial muscle to be able to. So we all still always have to think around and out of the box. when it comes to how do we, capture our customer at a most cost-effective way. But all in all, through word of mouth and really good merchant partners that really trust and believe us, and also the relationships that we have, we found ourselves growing up until now.
Thank you, Mr. Zondi. Just on the merchant partner side, I just wanted to understand the profile of those merchant partners that you have. If you could just speak a little broadly to that.
When you say profile, what do you mean?
I mean, bigger, smaller, national chains.
Okay.
Yes.
Okay.
So, thank you.
Okay. We've got a blend. We've got a blend of small business that just caters for probably 2.5 kilometer radius within where the store is situated, to bigger fast food chains that are very well known, have a national presence, and have given us the opportunity to open up in some of their township areas. If I am at liberty to share some of those people, I would say one of the first companies that really did believe in us and gave us an opportunity was Burger King, and Nando's as well. Those are the big main fast food guys that we've got on our platform. We also have smaller players, but are still, strong nationally in the form of muchachos, calamari fisheries. But we really pride ourselves by ensuring that the model of smaller businesses is present, because that's where we really get the most support. That's really where we get the most traction in terms of being able to successfully grow both small businesses. So in terms of our small businesses, we'll have the likes of the Hood Kitchen, Colorado Fisheries, Joko's Good Foods, certain Shisanyama venues that are on the rise on their side. And we're looking at, of course, expanding that into, Gogo's Guinas that she's got on the corner that she sells. How do we get her onto the platform? Because if she's just there and only seen as an informal trader, her business is limited to those that just come to her. So we'd like to really offer smaller businesses an opportunity to expand their reach in ways that they never saw could be possible.
Thank you, Mr. Zondi. I just wanted to ask you, with regards to the bigger chains like Burger King or Nando's, is your engagement with them at a national level, or is it just in the franchisees or?
We've knocked on that national door. Many a times, someone may even open up their door slightly and check and question who we are. But in most cases, we found ourselves to be quite unsuccessful when it comes to landing the national chain, solely because of our current traction being limited to a specific area. I am aware that, once you have at least a 70% traction across the country, it's a lot easier for you to knock on that door and maybe have presence. I'll give you an unfortunate case in terms of McDonald's, where we were just straight out just told that unfortunately they capped in terms of the amount of aggregators that can have on their platform, being of course top 2 plus their own in-app that they're trying to set up. It was a bit unfortunate because I still know to this day that no one does those deliveries in those areas that we're in. And so knocking on national doors is something I've been doing at least for the bigger players, because the minute they come into our channel, they knock on that door and they demand that store to be open, and it happens instantly. So again, that's to no fault of their own as well. So it's a competitive space. One has to find their own way of making things still work, and there's no use in crying over a door that wasn't opened. We just hope that the smaller businesses will open up enough doors for that aggregated amount to be justified in the end.
So I'm quite interested in your interactions with the bigger brands. So they are not, the bigger platforms are not there in the areas that you are in, and yet they are not willing to open up to you, even though you are providing that service. Is there any, I mean, is that the only reason that they only operate with the bigger brands, with the bigger platforms? Or are there other reasons? I mean, it's quite curious when you are the only one who's there, and yet they wouldn't engage with you.
Honestly, I wouldn't be able to speak on their behalf. I have no idea. I can only tell you of the reasons that they've shared with us. And the main reason, well, there's a couple of reasons that I've heard, going around. The main one that I've heard is we capped globally to only have X amount of aggregators. And of course, Mr. D and Uber Eats end up covering those and whatever internal app that they're looking at launching on their side as well. One of the other reasons is actually, to be honest with you, that's the reason that I've heard in most cases. And then, of course, the second reason would be based on our own traction. If we're not giving them a national opportunity of covering all of their stores, then it also doesn't make sense on their side to, I guess, to give us then the areas that we are in. It's a bit unfortunate, as I say, but I've knocked on many a door from the likes of, I'm not too sure how safe it is for me to mention brands, but I've knocked on doors, and I've knocked enough for me to understand that it's a common thing that it will be very tough for us to get the national brands on board until maybe we have a national presence, which kind of is a catch-22, because then how else do we grow in those places? So it's been very difficult. I've had numerous conversations and I've asked that why and never really received substantial answers. But it looks as if it's just something that they can't do.
Yeah, you touched on the chicken and egg situation, because that's what I was about to ask, that you can't have a national footprint. You have to start somewhere, and it's
Exactly.
often not going to be national. You start locally and then you expand, and given the opportunity, then you're able to have a national footprint. So yeah. When you were speaking about integration options, you do say that one of the options is to integrate with your merchant partners through their point of sale. Can you just talk a little bit on that, and just because we just wanted to understand how technically possible this mechanism is, and is it just an API option, or how does it work?
In most cases, I think first and foremost, before we have any form of integration directly onto a merchant's point of sale, we would have to have built enough trust with them for us to give us that access. And of course, our tech team would ensure that, yes, it is just a case of APIs being able to latch onto their point of sale via API and ensure that all forms of delivery that come on our platform now reflect directly onto that point of sale. The only reason why I think it is always the third option is because there's a lot of firewalls and there's a lot of important information that will be revealed to us of that merchant. And naturally, it would take a long time for us to get to that point. I also believe that the competitors, the bigger players as well, it's taken them years to integrate directly with certain restaurants, and in some cases they still haven't. I think the most common method or the best form of integration to ensure that the service delivery is still smooth is dropping off a handheld device. But given being a WeDash, the space that we're in, it's always easier, and that's a cost-effective exercise, if I can just put it like that. And it's always easier for us then to leverage off, existing laptops, being able to at least use their phones and work it in a way that whenever an order does come through, they can still accept and reject orders on their phone, and that system is still seamless. Especially when you're a small business where you are the business and you probably have 2 to 3 bits of staff, that communication is a lot easier than having a device at a store, having to now secure it, ensure that it's safe, and watch the other elements of crime that may, come through as a result of that. So yes, the third option is the most effective, but it's also the one where probably takes the longest to ensure that partnership is strong enough to justify an integration with their POS.
Do you have you already had a number of merchant partners on the third option?
We actually don't. I think there's that perception that there's just too much information to be revealed, and we're also young. We're young. We're a year in. If we get a new merchant today, we always give them the most easiest option. Why? Because it gets us into the door, it gives us the opportunity. So we haven't had the luck of being able to, but a year or two from now, with merchants that have been running 2 to 3 years with our platform, and we can also go back to them and say, look, guys, here are some of the faults that we're finding with the integration that comes with the first two options. One, sometimes your staff doesn't see it. Two, sometimes there's a load shedding issue, and all of a sudden there's a networking issue on our dashboard and on our devices. So can we get to a point where we integrate directly with your dashboard? But that, as I say, is something that we are happy for it to take time, and we're happy for us to build that trust up until we are in a position to get that integration to happen.
Yeah, fair enough, I think, Mr. Zondi. I just wanted to explore another conversation with you, and that is, and this is where I found your model quite interesting in that most platforms, including especially the big, or let me just say most platforms, they've gone for a fee model where bigger merchant partners are charged lower and the smaller ones are charged higher. And your model seemed to be a bit different to that. Do you want to speak a bit more on that and why? And why you do that?
First and foremost, our markups and our models are based on ensuring that the customer doesn't have to pay such an extreme amount for an item on our platform. We need to be aware of the channels that we're working in, and we also need to be aware of the importance of balancing the cost across all the elements of the business model. So although I cannot share the exact amount of how we charge and our commission rates, I can definitely be able to say to you that we've come significantly lower, and we've also ensured that the drivers are a lot more appreciated in terms of the relationships that we have and the type of incentives that we create for them. Bear in mind that these elements and these areas that we do deliveries in will always not be the safest if you were to compare them to any affluent area. And for that reason alone, then certain incentives need to come into place. And so, yes, as much as we're 11 months in, we've got strategies that we are looking to implement whereby our driver that hits 99% of his orders or above a specific percentage is incentivized maybe with a voucher from maybe one of the tire companies, or an opportunity for him to go and get his car serviced at a specific rate or price. Those are the ways in which we would try and balance it out. But in terms of just our model and our pricing structure, I think the big brands should pay more. and I think the smaller business should pay less. It's weird how it's not weird, it just makes sense because, of course, the big brands will give you more volume, and as a result, it justifies them getting a lesser commission structure. But on our side, we've just tried to be consistent, and because we're focusing on small business, we try to make sure that it's a mutually beneficial relationship than it is one that seems like it's a one-way street.
It is a it sounds like that, but I think also from my point is what that impact is on your consumer in and menu prices. I mean, for small business, that must be, it must have an impact, obviously, for a small business.
It has more of an impact on the customer, which is what I found. Yes, the small businesses are will have to negotiate and reach a common ground as to what percentage out of their margins can we tap into. But I think the biggest cry here will come from the customer, and it's important that we're mindful that he will at a given stage, and because of the majority of our customers not being exposed to online delivery within that space, they'll be prone to going in store. And the day they go in store and see a vast difference between the in-store price and our online price, then of course it builds into question WeDash before it builds into question the restaurant. So for us, it's very important that our markups are reasonable enough to justify the convenience we're bringing, but not at a point where the price of food just becomes unrealistic.
Thank you, Mr. Zondi. I just want to go, I think this is going to be the last area. I'm looking mindful of time. And that is one of your, you speak about expansion a bit and looking into other areas. What is your plan there, and what is the model best suited for you to go on your expansion drive?
I think most importantly, we have to be in the bigger townships across the country. That's our focus number one. Our model will have to be, of course, first and foremost, identifying drivers. Once you've identified drivers, getting our restaurant recruiters to go out there and build the marketplace, launching proper marketing campaigns and awareness campaigns that really build our attention and then give us that opportunity for the customer. How are we going to do that? Of course, is always is an expense. I think it's one of the reasons why expansion rate has been a lot slower. We definitely want to be there faster because it's still competition. It's still a business. And if we're not there, someone else is going to be one way or another.
That is true. You just spoke about expense and funding. I'm going to, before I go to the next point on expansion and competition, just want to talk a bit to you about funding. I mean, this is an expensive business, and just how did you go about? I mean, firstly, did you receive funding, and if so, how did you go about getting that? Obviously, without disclosing too much of your confidential information.
Sure. We were fortunate that the idea is really strong. The industry is growing, and the opportunity is very big in the channel that we've gone into. And after having had certain conversations with a few private investors, we found ourselves fortunate to have received a little bit of capital just to get us going. But in a business such as this, one as costly as this, whatever investments that we did receive was enough to at least give us a little bit of traction in the Western Cape, but nowhere near what we need in terms of building capacity for expanding our team, expanding our operational structures, and getting us into a point where we can have this conversation become a national one. So funding is tough, very, very tough. And in most cases, public funding is a route in which I don't think I've ever gone through before, because there's just so many processes to follow. And sometimes there's a lot of information on the net that is outdated, is what I found. So, you'd go to a specific public company or public sector organization that is supposed to be in line with getting you these funding opportunities. But in most cases, you'll find that to eventually get to the decision maker, it's taken months, it's taken a while. So we haven't really been fortunate with that angle. And we are hopeful that the opportunity will come our way. But it has been a difficult journey when it comes to funding this business and getting it to a point where we believe is expanded nationally. There's also a tough conversation that we have, of course, even with VCs and also private investors, where, is it fund ready? Is another question that we have to ask ourselves. And have we gotten it to a point where it has to be fund ready? Again, it's another catch-22 situation, because we want to grow, but they're expecting us to grow to a point where then the funding will come through. But we also need some of that capital to grow the business to a point where it gets there. So some of these conversations have been very difficult. Their reasoning has been not understandable, but I guess we're not going to quit now. We've already started it, and most importantly, we hope that then the right people see what we're about and eventually get us some support.
Thank you. Just the last part was, with your strategy of going into the underserviced areas, we see, and in fact, I think you have spoken to the bigger platforms now tapping into that market. What I wanted to find out from you is, when they do, what happens in terms of competition?
I've got the word in my head, but I think I need to find one that makes a lot more sense. It's going to be very, very difficult. Naturally, it'll be very difficult to compete with 50% off for a whole week, free delivery drives that run for the whole month, volume drivers that we just cannot compare with. And I think when that moment happens, I don't blame any customer that goes to their brand because of credibility. I hope that maybe our pricing will be better. The story and our brand by then will be a lot stronger. And maybe we would have been fast enough to have built some traction, so that, again, as the category grows, we grow with it. But when they do come, of which they have come into certain parts of our area, we feel in the hit already. And it's very, very tough to compete at that level. It's not their fault. I think, this is business. No one asked for smooth sailing. But I can tell you that there will never be a stage in which you can compete with their marketing budgets. And because of that reason alone, this business is run with marketing budgets and specials. And just because of that alone, we will definitely feel the hit.
Thank you, Mr. Zondi. I think I'll hand over to the chair and the technical team. Thank you.
Thank you.
Thanks, Mr. Zondi. I'm actually going to hand over to the technical team, Sigofatso Radinku, who's got a few questions, and then once he's done, I'll take over.
Thank you, Mr. Zondi. So I just want to understand on the issue of the national chains. So, you indicated that you are always on the ground and getting feedback from customers. So have you had instances from customers' point of view who maybe didn't upload, your app, or they didn't even order from your platform because you don't have some of these national platforms on your, the national chains on your app?
Hi, Baba. I hope you're good. Yes, definitely. I think who doesn't want McDonald's? Who doesn't? Who wants to get onto a platform that caters to us, makes us as a business more credible, and it gives the customer, who's the most important part of this business, the options that they're looking for. Now, if you naturally are a, a Big Mac person versus a
On your ability to grow.
I mean, just on your last point, I know you said you couldn't necessarily fathom the reasoning of a cap, or some of the answers you've got. I just wanted to understand you said Burger King and Nando's have given you support. And I just want to understand, are these franchisees or corporate stores that are operating in your area?
We've had access with the franchise stores and received a beautiful noise for their corporate stores.
So beautiful noise means what?
Beautiful no. It was a well-shaped and well-structured no.
All right. So so when you say you've got support, it's really from the franchisees, not from the corporates, even for these two. Is that right?
Yes. Not to say that we haven't had the request at national level at with their head offices, but there's been that restriction. So we've had to at least get permission from the franchise stores to open up and still, partner up with them. But at national level, we've been quite unfortunate.
And for you mentioned a sort of global cap. Presumably that's a global fast food chain. But for local fast food chains, have they also raised the issue of a cap, or are there other reasons that they've raised?
Who would be a local fast food chain that, if you can just give me an example?
Well, I suppose Nando's is local.
Yeah, well, Nando's, as I said, we went as far as the main person at Nando's, who at least gave us permission to open up the franchise stores, but we were not given permission to open up their corporate stores. With the bigger players or the global players, we were just told that there was a global cap on the amount of aggregators they could have. And there was nothing that could change as a result of it coming from, wherever their main headquarters are, whether it's New York or somewhere in Europe.
And if you managed to make it up the chain of command at Nando's, was it also a cap reason, or were there other reasons for the corporate store?
I think the main reason is the fact that they've got existing partners that are there, or they are in the pipelines of building probably something of their own. And because they're building something of their own, they would like that opportunity to go to whatever in-house tech solutions that they're coming up with. Those are the main two reasons that I found. Even though that in-house tech solution will take probably another year or two, it's still a limitation on the current partnership requests that we are asking for.
I just want to understand, sorry, on the API access. I mean, I'm not a tech person, so I'll put that disclaimer on. But as I understand sort of APIs, you're sending information into this system. You're not extracting information out of this system. So I just wanted to understand whether, having an API access does let you into their secrets or not, because it wouldn't strike me that it would.
What it does is when the tech guys, and of course I can only answer this as well as someone who's received insight from our tech partners, is there's a lot of firewalls that have to be broken in terms of their point of sale. And so when the point of integration happens, we will not necessarily be able to get information from their side to us, but we will be able to have access to that information when that integration happens. And as a result, it's quite important information or property or for access to financials in which they may not be willing at that point to share with us. So that was the main reason that I found is a limitation. And it's not to say that it's based on, at a later stage, our team being able to see what's happening, but it really is as they give us access codes, as they give us all this information into their GARP system or whatever point of sale system that they're running, we'll also then, as we are integrating, see and get some of the important information that their businesses have.
Right, so I understand it's almost, you've got access through the firewall, so you could be a conduit for others, even if it's not you.
Yes.
All right, I understand that. That makes sense. Just two last areas. I mean, on the venture capitals, you mentioned that you have had some interactions with venture capitals. Is that right?
I've submitted, I'd say, maximum 2 proposals, and the majority that I've seen online have got certain criteria in which we just don't fit yet. For example, maybe your business needs to be turning over $1 million in terms of revenue. And, for a small business to get there within 11 months sometimes may not be realistic, but we are in need of course, still that funding. So in most cases, when I do, open up and see which company is looking at investing in tech and, we tick a few other boxes. But when it comes to the ones where they're looking at investing, I don't think our numbers are at that point. And so it limits me to just throw our pitch deck out there, knowing that we may not really get any hits.
All right. So the kind of criteria are, as you say, not at your stage. And I think we discovered last week when we spoke to the Venture Capital Association precisely that the sort of pre-seed funding, angel investors, not something that is that big in South Africa, which would be in your stage.
Yeah.
And for the few you have put in applications for, have you had a response?
Unfortunately not. We were just fortunate with one private investor that at least bought into the vision and into the plan. But I've received responses, of course, from the 2 VCs, and their feedback was as simple as, unfortunately, you don't quite fit the criteria yet. So it's almost like saying, well, come back in 2 to 3 years' time once you hit that revenue and you are at that stage. And it's a bit tough because then how do we get to that point without some of this support?
No, exactly. And that's, I think, a conversation we started with them last week. And how do we overcome that problem? Because it is a barrier. The last thing I just wanted to ask, I mean, we heard yesterday from Uber Eats saying, well, as a disruptor, they've almost paved the way for subsequent platforms to emerge because they build the trust that consumers have with credit card payments and ordering online and overcoming or training merchants in how to engage in this, training drivers. I mean, it strikes me that I mean, I suppose you're first into the township area that you're operating in. I mean, do you think that you are now paving the way for the others to follow? And you've almost made it easier for these big platforms to come in?
Without any form of arrogance, I would say yes, because we already have a big player that's entered one of the channels that we started. And I would like to think that even if they had that in the back of their minds as one of their strategies, that must have been sped up through the insights and the revelations they may have picked up from the smaller players and platforms such as us going into those places and, at least breaking those barriers. I mean, the big players are fantastic. They definitely have paved the way in terms of creating an industry that really is on the rise. But it's safe to say that they were very comfortable and are happy being in some of those affluent areas. And so if we could still be seen as the first in these townships, there's still a lot more perceptions that we have to break. There's still a lot more education that we have to create around the online space in the township areas. And it's safe to say that if we can then at least get the reward for going into that channel and being recognized for the ones that are trying to create it, I think would be well deserved of WeDash for that. But it's definitely not to say we're the only ones, and it's definitely not to say that it will start and end with us.
No, thank you, Mr. Zondi. I think it's been incredibly useful for the panel to hear about your journey, as well as the challenges, because, I mean, as you just indicated, you have opened up this food delivery in areas where others have not sort of dared to go, and offered a lot of opportunities. We're moving on to the Restaurant Association of South Africa, and I think we're going to let Ms. Alberts into the room.
Okay. Is it safe for me to go?
You can go, Mr. Zondi. Thank you very much for your time.
Thank you so much. All right. Keep well. Bye.
Good morning, Ms. Alberts.
Good morning. How are you? Thank you so much.
We're very well, thank you, and I'm glad you're not load-shedded and you're with us now.
No, we're completely load-shedded. In fact, we're on a rolling blackout. So we're having very many challenges here because our box has got illegal connections to it, and Eskom doesn't have either the manpower or the budget to actually fix it. So we are now on day 5 of technical Eskom problems.
Well, that sounds like fun. Ms. Albert, you're representing the Restaurants Association of South Africa. I think you're aware of our inquiry and the scope of the inquiry, and I don't know if you're aware of the statement of issues as well that we've put out.
Correct, yes, thank you.
And I know you, well, I'm informed that you don't have a formal presentation to make.
Correct.
But I wondered if you wanted to start off with highlighting some of the main points you wanted to raise awareness of before the panel, and then we can follow up with some questions. I mean, you tell me how you'd like to proceed.
With pleasure. I think I'm very happy to start, obviously from the onset. I'm going to turn the video off just for more stability, if you don't mind.
If we can keep it on, we'd prefer that just for the purpose of a public hearing.
Okay, no problem. We'll try it for as long as we can.
Yeah, it's fine at the moment. So, and maybe just to obviously remind you, if you don't know, this is being broadcast as a public hearing, and therefore, anything confidential, just please avoid raising.
Correct. I think, we were one of the critical associations from the onset of COVID that quickly integrated ourselves to being able to bring critical information, clarity, content, and an understanding to what was absolutely happening. In the beginning of COVID, there was obviously a massive fear. I think that the fear-mongering state really put us into a very disheartened place in the restaurant sector. A lot of people, we spoke about these million graves, we spoke about COVID and the death and all these things that you could catch it from everywhere. Being in food safety, I think one of the things we critically always understood from being food experts is that food safety has always been a high priority for us. So the first onset that we had engaged with the minister, I think everybody was on a flat foot trying to understand. We were no experts at the pandemic. We certainly were no COVID experts, and we certainly didn't understand the parameters and how government wanted us to move through. paramount for us was really keeping the people that eat in our restaurants safe, keeping our staff safe, and ensuring we respect government's decision to act as the leader as we drove through the changes of COVID. You know, in hindsight, we can always be more critical, but I remember in the beginning, we agreed to work very firmly with government in the position of working and finding solutions that would cause the least economical impact and have the most viability in terms of ensuring that we keep people safe. In the very early stages of COVID, our restaurants were closed, which meant that we still had massive debt that we needed to support. Large portions of our debt really was landlords, critical to the survival of restaurants. The second major factor was obviously banks, and the third major factor was staff. So we got there was some engagements that we took place very quickly with the banks. Some of them did a deferred payment on the bonds that some of our owners had. Landlords were quite supportive in the first 3 months of the lockdown, and they certainly did give us some kind of rental holiday or rental deferment or rental write-off. And then obviously we moved quickly into TERS and UIF to try and get the relief for the staff. Our businesses at that stage were not operational. We then got given the go-ahead to move directly into deliveries. And this, I think, is where the critical conversation comes from that we really need to have with each other, is on the onset, many of our restaurateurs are not delivery experts. We are sit-down restaurants. There are different types of, business blueprints, if you want to call it. We've got the takeaways, we've got the restaurants, sit-down, cafes, anybody really falls into that. And then we separate it to the sort of bars and lounges, so to speak, pubs, bars, and lounges. And that's how we quickly differentiated what our needs were and our requirements were from that. The deliveries within the larger franchise groups, I think that model has always been in place for them. They have relationships with the different third-party deliveries, and those rates are negotiated from high-level managerial decisions based on different mediums, I guess, for marketing platforms, rebates, etc. And they've got a business tool that they've always worked with. Those businesses were quite swift to reopen. As a restaurant industry, we certainly called on all the big players within that market who were not that favorable to actually help the sit-down restaurant industry. You know, I remember we had taken a task to actually write the operational standards or the structure to get the regulations out, and then they didn't want the rest of the industry to use. Sorry, we're back. They didn't really want the rest of the industry to use the documentation that was put together, and it caused some conflict, which we needed to rewrite it quite quickly to lobby to get the sit-down restaurant open. So there was already a competitive approach to surviving the drive-thrus and takeaway businesses as what there was to critically standing in unity as a restaurant industry, and everybody sticking together to try and do what we can to survive the industry, to keep jobs, to preserve livelihoods, and obviously to preserve the amount of economical push through into our sector. And there were a lot of challenges that came through at that stage. You know, supermarkets could sell hot food, we couldn't sell hot food. A lot of erratic decisions that were made at the time that was disfavorable for us to being able to run our businesses. One of the key issues was obviously the third-party delivery services. It was a space that we had to quickly look at consulting, and we consulted the two major players within the sector. The one player was a conversation that took place with a young lady representative of their particular business. And there was absolutely no apathy given to any type of reduction on the fees. And what we found, it was either do or die. We had no choice but to use them because that was the structure that the government had put us into at the level lockdown that we had at the time in order to keep our businesses afloat. The other larger player was also non-negotiable in terms of any type of rate. So we did approach them. I have given all that documentation on to the commissioner, and we were not able to get any relief. It wasn't only the fact that it was the rates. We had then looked at worldwide trends. The worldwide trend was quite clear that that rate had been reduced to around about 8 to 10%. And many of the countries, hospitality, councillors or ministers had actually given directive to cut those rates We didn't unfortunately get that support, and we were given the reason that it was during a pandemic and that the law that we operated within didn't make it favorable to be able to take case-by-case management on contractual law to be able to have renegotiated those rates. So we certainly felt at that time that the third-party deliveries really took advantage of the space that we were in. We were new. They own large databases which belong to restaurateurs and to third-party delivery guys. Those databases are housed and owned by the third-party deliveries. So for many restaurateurs, it was very difficult at the time to remodel or to relook at a different third-party service. That market became hugely competitive. So there were a lot of new operators into the industry which came in at a far more reduced rate, flat fees. A lot of restaurants then took to be able to do their own deliveries, large groups then used their staff who had vehicles to try and deliver in the local areas. But unfortunately, the third-party deliveries, the big critical thing for us, which has held us ransom, is that they own the databases of the customers with our menus. And also we were waiting for long-term paybacks from the money that was collected to get that pay back to us. So cash flow became critical for us as well, because they were holding money that we had collected on the back end, which wasn't paid over time to a number of customers. So we had a lot of complaints from restaurateurs and takeaways, smaller takeaways, not the franchise group, strangely enough. Only the independents had massive conflict. Call center lines were down. We couldn't reach them. Emails weren't working. Nobody was responding. We had a huge number of complaints with the lack of technical support. Many of the iPads had gone off, or the ordering systems had gone off, and yet we were still expected to pay the monthly rate, the hiring of the fee for the components, and there was absolutely no concession given back on the hiring of the components or the rebated fee or the onset fee, and absolutely no integration from any of those organizations, regardless of how many times we reached out to actually do something that was valuable for the industry. So we also then got a number of the Uber drivers that, let me not use the word Uber, a third-party delivery drivers that actually approached us to use them directly to the restaurateurs, and they had formed or abandoned part of the network to belong to an independent network, as so to speak, to be able to offer those services back into our restaurants. And then we actually understood and we learned about the financial model of how complicated it became and how small and minuscule the margins are that the actual operator gets. And then we understood why the food safety was being compromised, because at a very small marginal rate that they pay the delivery guys, it's almost impossible to, one, properly insure the motorbike, two, to actually maintain the motorbike, three, to maintain the safety elements and the protocols. So what we found is that many restaurants at that space actually made provision to ensure that there was no break in the food safety from the product leaving the restaurant to get into the consumer's home. So we were actually providing sanitization and masks and the back boxes and sanitizing them and giving them some kind of support and training, etc. And then some of our restaurants were also housing them in proper luminous gear that they could actually be seen on the roads, because it became such a concern that this wasn't, that the adherence to road safety, the basics, were not met with the guys. So I know that over time we certainly have tried our very level best to establish a framework to bring alternative suppliers into the business. But the two parties in particular, like I said, we feel that our industry is owned by the software, by the system, by the database of the clients, and by the availability of the amount of products. They own all our menus, they own all our clients. And it makes it very difficult to be able to switch over. And it needs to, that's why we feel that this inquiry is really good, because that really needs to be unpacked and for that to be given in a competitive space that we can actually access our own information.
Thanks, Mr. Albers. Is that or it, or are there any other issues you wish to raise in respect of food delivery from the Restaurant Association's perspective?
Look, it became a very critical component to our industry. We couldn't trade our businesses without the third-party deliveries. And there should have been an approach taken to have made it affordable. So in a space, just to give you financially, which I've already submitted those financials through to the Commissioner, we were only able to trade at around about 8 to 12% of our budgeted turnovers in a space where we were paying out almost 37% to the third-party delivery, which made it uncompetitive for us to even trade. So we were running our businesses to keep the third-party delivery companies in business, while the poor driver at the end couldn't even survive by paying for maintenance or proper equipment to get our food delivered effectively to the consumer. So those were really, really critical challenges for us. And I think the inability to engage with any level of senior management within those organizations spoke volume. There was no collaboration at all. There was no empathy to what was happening in our industry. And very quickly, the takeaway sector had separated from the sit-down restaurants. So, we really got impacted massively by re-engineering our businesses on the sit-down businesses by becoming takeaways, by being deliveries, by being drive-throughs, by being picnic spots, by being road houses, by being bottle stores. We could sell alcohol, we could deliver alcohol. We were coffee shops where we couldn't trade, dinner time trade. Throughout this entire lockdown process, we haven't been able to trade our businesses as proper restaurants. We've had to make many, many infractions on our business models where we haven't been able to create the unique experience of which our business model was based on. So it certainly has been very difficult for us financially to pay out those huge amounts of money to third-party delivery companies.
I mean, I suppose the delivery companies would say that they gave you an option, or your members an option, to actually trade, because I think, as he said, I mean, I assume most of your members may not have had delivery. Is that right?
Many of our sit-down restaurants, delivery was a new component that we had put onto the businesses, but there was a large portion of our industry of the independent takeaways, Chinese, sushi, Thai food, your quick serviceable restaurants that are not franchise operations that really took a massive fall with the high rates because they were only able to trade at such a small capacity given the curfew, the times, and the various other elements which I've submitted in the document to the Commissioner.
Yeah, and I just want to separate out the COVID because I suppose, obviously we've gone through that patch and part of what you're indicating is the difficulties that the industry faced. But we're also forward-looking on food delivery. It's not just to sort of look back over this period. And I just wanted to raise a few things in relation to that. I mean, first of all, I suppose you've raised the issue of customer data. You say that the delivery platforms own the customer data and the menus. Is that right?
I'm struggling to hear your question.
Sorry, I just wanted to go to a few of the things you've raised, but the first one is just customer data.
Hello? Can you tap it, please, guys?
We can hear you, Miss Albers. Can you still not hear us?
No, I'm going to try on a different device. I'm going to try and connect on something else now.
Ms. Albers, can you hear us now or not?
We've just switched to a different hotspot. We're going to try that for a moment, okay?
All right.
A bit more stable. Yeah.
All right. Can you hear me now? Is that better?
Yeah, that's a bit better. Thank you.
Yeah, I do apologize for the technical glitches. Obviously, it's a challenge, as you pointed out. I just wanted to ask you first on customer data. You say one of the difficulties was that the third-party platform owned the customer data. Is that right?
Correct. So there are agreements in place that give permission to house it, but the way that the third-party system is set up Can you hear me?
We can.
I'm struggling out.
We can hear you. Mr. Albers, are you there?
So we're just trying to switch over back onto the Telkom router. So sorry about that.
Not a problem.
Okay, right.
So sorry, when you talk about the ownership of data, who are we talking about? Are you talking about the delivery platforms?
So what a restaurant will do is that the restaurant will give that database to the third-party delivery to be able to put into their unique system, which the consumer then will tap into. So on a third-party delivery system, there could be access to many restaurants, not only one restaurant, for instance. So you have a choice and a variety of restaurants to choose from.
No,
so it makes...
Yeah, so and obviously you have to list in order to get orders from that delivery platform.
Correct.
All right. I'm just wondering about the customer data. Are you talking about the final end consumer, or are you talking about the restaurant?
About the third-party delivery company, because they tap into the third-party delivery to make multiple purchases from various restaurants. Okay, does that make sense?
It does. I'm just wanted to find out, sorry, the issue of consumer data. So I just want to understand what your concern is with consumer data.
Well, for us, what we feel is that there are millions of people that use the third-party delivery services where we put our information onto that database. And that is that although they're our clients, they choose our product through the platform by utilizing what they want from us, but we don't have access to that database, but they do pay for the restaurant food or the delivery of the restaurant, but they pay to the third-party delivery.
So do you then feel that information, who the customer was, should be available to your members?
Correct.
And for what purpose? To market to them as their customers directly?
So there's a platform which ordinarily lent itself on before COVID. So I know this is a more so COVID inquiry that lent itself to the use of a platform with multiple businesses or multiple restaurants on it. So, for instance, you as a customer could order from 20 different establishments or restaurants on that platform. And it brought in an extra value of turnover onto our businesses. So through COVID, when COVID came, because of the restriction on the amount of turnover that we've had, it cost the restaurant so much more to be able to facilitate the order on the third-party delivery because there wasn't sufficient revenue to be able to support the cost on it. So it became our highest cost. It actually became higher than the cost of leasing or banks or any other charge because the highest expense relative to the percentage operation.
All right, I think I understand where you're coming from, because I think certainly the feedback we've also had is that for some restaurants, obviously delivery used to be some incremental add-on to get access to a few more customers, but at least with the height of COVID, it became the only form, potentially, apart from some maybe walk-bys, depending on the level. And have your members seen a lasting effect of that? So clearly we've opened up a lot more right now, but has there been a lasting effect that this is a much bigger part of their sales than it used to be, because customers haven't necessarily made the journey back to where we were pre-COVID?
I think this is a very interesting conversation we're going to have because there's a lot of assumption that goes into my feedback. So first of all, we have not been able to trade our restaurants as restaurants in the capacity of what our business model is. So throughout the entire COVID, we've been restricted by hours, time, numbers, alcohol sales, and different levels. The one thing that's remained consistent that we've only been allowed to do is to do deliveries and to do takeaways. Takeaways wasn't such a large component. Deliveries became a massive component.
And when you say other countries put a cap of 8 to 10%, is that on the delivery charge or what platforms
Correct.
could charge?
In the same large two. Correct. They capped the delivery fees at that time.
And do you know which countries did that and whether it's still in place?
America and the UK.
And is it still in place or now they're opening up? Has that changed?
I must be honest, I haven't done any research. If you want me to quickly research it for you, I can and come back to you.
We'll come back to you on that, but obviously not in this session. Just in terms of that fee, I mean, you mentioned that your restaurants pivoted and that it may be that these platforms might say, well, you could offer your own delivery if you're not happy with our service. Is that an option for your members? A realistic option?
I missed the question. Sorry, you froze for a moment.
So, Ms. Alberts, I was just saying that the fees you indicated your members think are high. They should be lower given the amount of trade that's going through the platforms. My question really was do your members not have the option of avoiding the platforms and just doing the delivery directly themselves? Or is that not an option?
So holistically, there are many restaurants now that have taken to doing their own deliveries. But there were restaurants that had contractual agreements with the third-party delivery companies that could not use their own deliveries. So that was one of the critical things at the time. And then obviously the huge cost to get it to that. And if you actually look at the breakdown of where the money goes, I've given that financial model through to the commissioner to actually look at. So I'm not going to rediscuss that, but that is critically what happens is that there is a markups on the product within the platform, and there is small payouts in terms of commission or a delivery fee to the operator. So the largest margin is actually taken by the third-party delivery company, as opposed to where it was costing us to actually use the third-party delivery companies in the initial state of lockdown.
And sorry, I just want to return to customer data because I don't think we fully finished that off. We got moved to rates, but you said that obviously these are your customers or your members' customers, and therefore, but that they do not have access to that customer data. Do you think that the restaurants or your members should have access to the customer data from the sales that they undertake? Ms. Albers, I don't know if you can hear me. I think we've lost Ms. Alberts. So I think we will see if we can get her back. But in the meantime, I think we may just take a 5-minute break. If we don't manage to get her back, we'll close the session. Well, it seems that we're unable to get Ms. Alberts back due to technical challenges on her side, or power challenges. So we're going to end this session and we'll resume at 2 o'clock with Mr. Delivery.